So I think this is one of the biggest questions most of my investors have asked, right? Like, where do I invest? Palm Jebel Ali or Oasis? Now, it was extremely hard to get the right units during the launch, but I think currently there's a lot of opportunity where I can negotiate both payment plans. See, I've no doubt in terms of I know both these products will definitely appreciate. They are. I think if I have to benchmark or I have to say what are the best products in the market, these two names constantly appear. And most of my videos I've always said to about both. About I've spoken about Emaar. I've said like let's say downtown with an epicenter. I've compared Oasis with Emirates, and I've always said if you invest that particular belt from Palm Jebel Ali downwards is extremely lucrative. But again, I am confused to do pits. Like, I don't want to get stuck. That's all. It's a big amount, the big value. I think this will be technically my biggest investment that I've made. The big risk. I faced some losses the last 3 months. I've not been able to liquidate some assets, which I thought I could, but they were more of an emotional buy. I want to make a rational buy. That's how I've got two of my best consultants in them, and they're the best in the Dubai real estate market. It's very, very hard to get such consultants. So we're going to fight it out. Oasis versus Palm Jebel Ali. May the best man win. So we start with the first round. The first round would be of 8 minutes where both consultants will give their opening pitches. Consultant 1, why Palm Jebel Ali deserves the 20 million, and consultant 2, why Emaar Oasis deserves the 20 million. 8 minutes.
I think the most important question you need to ask for yourself is, before choosing whether it's Palm Jebel Ali or it's the Oasis, is who's your competition, right? So you start with Oasis. Actually, Oasis is a product that I genuinely love. I made lots of videos on. So in Oasis, it's it's a plot. It's an inland plot. Okay, it's luxury villas built by the best developer in both Dubai. So your competition, you got Jumeirah Golf State is your competition. Al is your competition. Emaar can come up with phase 2 at the same time. It's the Oasis. It's very easy for Emaar. Like, you can always dig in the desert and build something like that. So in the current supply, you have all the luxury communities which are around you. I have 8 minutes. I don't want to name all of them. All right. And you have the future supply, because always going down in the desert, Emaar can have the ability to build something like the Oasis. And it will create a price ceiling, because when there is much supply on the same price. Now, when you go on Palm Jebel Ali, on the other side. Now, Palm Jebel Ali, it is a project that took 26 years to make. All right. Your only competition, in my opinion, that it may even, I don't want to go on a point and say there is no competition at Palm Jebel. The coastal line is very limited. It is a new benchmark in engineering standards. Okay. And at the same time, if you go through your closest competition here, you're talking about Palm Jumeirah. And Palm Jumeirah, it's the one which was setting the benchmark for Dubai real estate market for the past 15 to 20 years. So what Nakheel is trying to do here is trying to uplift that benchmark. So simply, when you're talking the competition, there is very limited. That is point number one you're talking. Beachfront villas, it's a sign of vision. It's a sign of power, all right? And it's a sign of status. Because now in the market currently, you have a total of 1,500 beachfront villas. They are centered around Pearl Jumeirah, Burgari Island, you got the farm, and you got Marsal Arab, right? So because of its scarcity, right? When you are going there, the price peak for it is gonna be very difficult to find. So it's this is the first point. Secondly, there is a micro scarcity done inside Palm Jebel Ali, because there, like when you are going to Palm Jumeirah, you have the garden homes and you have the signature villas. When you are talking about Palm Jebel Ali, you have so far more than 25 different unique designs, 25 different facades, 25, it's plus. Now there is the last launch coming. So when you are having your villa, you're not gonna be competing with all the beach collection or the coral collection when you're talking about Palm Jebel Ali. You're gonna be competing with the villas that are having your own design. And this it creates a micro scarcity inside Palm Jebel Ali. So understanding your competition is what I would say in this point, that I'll be choosing Palm Jebel Ali over the Oasis in terms of the long term. So this is the first one. Secondly, let's talk about the demand. All right. Now, in Oasis, you will get a lower price per square foot. You will get a bigger size, but you are having a much more competition compared to a beachfront, with a private beach access island, where you have zero competition. Nothing is like that. And even like, let's say if tomorrow someone tried to build a Palm Jebel Ali. Let's say someone is as visionary as Sheikh Mohammed bin Rashid, and he decides, okay, I want to build another Palm Jebel Ali. With today's infrastructure costs, with today's, engineering standards, okay, with today's construction costs, then getting a beachfront villa at 2,800 dirham per square foot to 3,000 dirhams per square foot. This is a number that it may only exist in your imagination. What I usually tell to investors, the townhouse by that point will reach the Oral Villa, which is a 60 million on today's infrastructure cost. The only reason is that this project started 2002. So because of this scarcity, this is why there is huge wealth. Now, if you are talking about the super prime market, if you are talking about the people, because see, wealth is the hardest thing to fool. And if you are talking about the super prime market now, people who are writing the $10 million check, they are choosing their Palm Jebel Ali over the Oasis, at this point, because of the scarcity factor. Because this is a trophy asset that cannot be replicated. So this is why there is a chance that I would go for the Oasis, because there is the downside of Palm Jebel Ali here is that it requires a higher entry point. I mean, like, you can get at 12, 15 million, you can get a good villa in the Oasis. Getting a townhouse in Palm Jebel Ali will cost you 14 million. Just a townhouse. Right? So it's a higher scarcity, it's you and HLI game. And this is why I love things like that, because the scarcity is connected to value. And with the reason why Dubai introduced Palm Jebel Ali is because in the 2040 Urban Master Plan, they want to increase the hospitality footprint by 137%, and they want to increase the coastal line by 400%. What is the single project that contributed this the most? It's Palm Jebel Ali. You have 110 kilometers on the coastal, and you have 80 hotels and resorts that are coming there. So they are trying to set a new benchmark in Dubai real estate market after Palm Jumeirah. And now already Palm Jebel Ali is competing neck to neck. But being a sad, is competing neck to neck with Palm Jebel Ali in terms of the wealth being absorbed. So yeah, all these signs and the idea and the new benchmark and the scarcity are the things, in my opinion, that would make me choose Palm Jebel Ali. Despite the Oasis is a fantastic product, like what you said before, it's gonna make huge appreciation. But just when I think about it from a competition point of view, I would go for Palm Jebel.
Very. Just a quick disclaimer before I start this. Don't time this, it's just half a minute. Whatever numbers that you will see today from me, these are hardcore research from me. Sources are Property Monitor, DXB, DLD. I have all Excel files ready with me, basically checked. So for any investor, why again I tell you this, I'm sitting with a 20 million dirham client. I'm not going to be answering questions and presenting using ChatGPT and Claude. Claude is only used to present my Excels. Numbers are hard checked by me. Because, for example, if I have a 20 million dirham client, I should be knowledgeable and I should basically research whatever I say. So just as a disclaimer, let's get started. Now, the Oasis, right? He has 20 million to invest, forget about 20 million. Just let's look at Oasis as a product. This is not a villa. You're not just basically buying villa. You're buying unit matrix that cannot be repeated. What do I mean by this? See, when Khalid mentioned, he mentioned a very interesting thing, right? Density, scarcity. You know, interestingly, when you talk to UHNIs, right, they always look at one thing, density. See, ultra luxury does not mean having fancy, let's say, interior designs, okay? I can buy a studio in JVC and put 100K and make it, you know, something extremely expensive. Extreme ultra luxury means density and scarcity. And today, Oasis, if you actually look at the surrounding, is 330 to 820% less dense when I look at units basically per million square feet. And I'll prove it as well, right? But before all of this, let's actually look at numbers today, right? What is something comparable to Oasis and what is happening in the market, right? So Oasis, if you today look at it, Oasis is not 100 now, it's 80 million square feet, by the way. The remaining 20 million square feet will be built as something else by Emaar, not standard apartments and townhouses. They will be ultra luxury mansions or villas, not yet confirmed. But now let's look at 80 million square feet. In 80 million square feet, today, current supply launched by Emaar is 2,373 units. There's one more cluster which is coming. This will have around 50 units. Total supply will be under 2,500. My density is 30 units per 1 million square feet, right? Now, interestingly, let's look at floor plans, because when people, HNI, UHNI people come, they require spaces, they require great built-ups. In Oasis, 91% of the built-up is more than 7,000 basically of square footage, right? Now, let's basically see what is happening in the market. Villas above 7,000 square footage in established communities. You have Emirates Hills, you have Jumeirah Golf Estates, Dubai Hills, Al Barari, District 1, even your Damak Hills, Ranches 1, Lakes, Jumeirah Island, Meadows, Jumeirah Park, Heartland 1, and the Villa. Now, I am not even considering right now density. Let's just look at villa sizes for somebody to buy. These are the total number of villas. These are total number of villas above 7,000 square feet. From July 2025 to July 2026, this is resale transactions. In basically villas above 7,000 square feet, this is the total number of resale transactions, which means 255 qualifying villas in established villas communities have been transacted. Roughly accounts to only 20 villas to choose from every month. Now let's take another slide, right? Let's look at the off-plan, because off-plan, right? A lot of times people buy in first phases and they try to trade. Let's look at off-plan communities near Oasis, right? You have Tilal Al Gaf, you have Damak Lagoons, you have Oasis itself, Acres, Expo Valley, Grand Polo, Heights, Jumeirah Golf Estates 2, Damak Islands 1 and 2, Athlon, Wilds. This is the total villa supply. These are total villas above 7,000 square feet. This is resale transactions in July 2025 to July 2026. Now, interesting, next slide, please. If you now look at from transactions to listing, because look, for me, transaction means a buyer basically wanted to buy, a seller sold, they mutually agreed on a price, and the transaction happened, right? But a lot of times we need to also look at something which is listing to transaction, because listings will also give you genuine demand, right? How many people really want to sell? Typically, as an estimate, looking at Property Finder, looking at back data from DLD, established communities which have 10 to 20 years already are very, very limited in supply. People don't want to sell. These are HNI clients. They're not desperate to sell. These are their family homes. Typically, when you're looking at, let's say, a transaction, it is 85 to 90% a conversion rate from listing. So typically in a year, if you have 100, almost 85% of these get transacted because supply is very, very limited. There's not a lot of options to choose from. If you look at, let's say, for newer communities, right, off-plan communities, transaction typically conversions are anywhere between 65 to 70%. Why? A lot of people are doing their payments. Sometimes there's payment delays. People need to exit. There's a lot more options available. That's why if I say conservatively, if 100, let's say, units come into the market, maybe in a year, 65 to 70 actually get transacted. There are still 30 units which are yet to be sold. Now, interestingly, that means on an average, we have anywhere between 500 units above 7,000 square feet, not even considering density, the ultra luxury facet of Oasis, to be bought in a year. Interestingly, now, if I look at the assumed conversion, the implied listings, if you can go on the second slide, this is what is actually comparable. The established communities, all of them, which I'll prove in my next presentation, the current price per square feet, and as my client, Mr. Zohaib, always mentions, you should look into resale data. You should never look into off-plan data. Off-plan data is a benchmark. resale is genuinely what a buyer buys from a seller. If you look at resale data, this basically is priced 90% above Oasis. If you look at near Oasis communities, it is 50 to 60% more above Oasis, which means if today I am an HNI client and I want to buy something comparatively or even lesser than Oasis, every year I have, let's say, 110 to 140 units to compare. And the last slide, which actually talks about demand and supply, let's look at Dubai's wealth pool. You have 81,200 millionaires. Your UAE net millionaire inflow in 2026 was 9,800, out of which 7,000 were coming to Dubai. Now, obviously, the conflict has happened, right? Maybe all 7,000 are not going to come. Another thing, a single millionaire is basically somebody who has a net worth of $1 million US. We are talking about an asset which is minimum of $3 million US. So I'm not even going to consider that all 7,000 of these want to buy big size villas. Even if I consider that inland community villas are acquired by 5% of those, right? I have a ratio where I basically look at this in a way that for one villa, which is above 7,000 dirham, which is above 7,000 square feet, comparable to the PSF in Oasis today, I will have at least 2 to 3 buyers, right? This is something where I'm not even talking about the density factor, the scarcity factor. This is a genuine truth scenario. And now, to close basically the first, let's say, argument, when you're buying Oasis, you are not just buying something as a villa community. You're buying a legacy which genuinely cannot be repeated. Because let's look at it, right? Khalid mentioned Emaar can buy or build, let's say, another Oasis. Emaar started Emirates Hills, a comparable to Oasis today. When you look at something which is a villa mansion community, Emaar took 20 years to dictate and to, let's say, build another Oasis, right? And even if so, with Emaar's track record, at the end of the day, my client needs to make money. And my client will always make money because this is one product which genuinely cannot be repeated in terms of inland density value.
Right. Okay, so the next part, that was a very, very interesting first part. I get like this is why these both are champions sharing. Round one is brand and story. So for the next 10 minutes, I want you to talk about legacy, the global narrative, and long-term positioning. Harm versus Emaar fluctuates.
Okay, so I'll start round 2, the legacy of Emaar, right? Okay, I'll also explain first how I'm going to take this round, right? Because I can talk about what Emaar has done, but I'm going to do 2 things interestingly. I am going to talk about Emaar. I'm going to talk about 2 actual communities, how they've performed by Emaar. And I'm also going to give you a very interesting comparable, because today it's not just Emaar, it's the Oasis as well, right? How a density and price per square feet plays into the competition, right? When you're looking at it as a whole, how it plays. So, okay, Emaar, nobody needs an introduction. Just to give you simple stats, 129,000 units delivered in Dubai and international markets till date. Emaar has a land bank of 600 million square feet, 370 in UAE itself. Okay. Today, Emaar has 40 hotel and resorts, 10,000 keys delivered. Interestingly, now let's look at money as well, right? Has Emaar made money? Last year, Emaar topped developer sales, 80 billion, 49 was revenue, 25 billion sitting in the bank right now. Now let's look at what the global, let's say, market has to say, right? So we made a very interesting video. You can check it as well. It's not a promotional thing, but you can check it as well on my channel. It's developer risks. Emaar was rated one of the safest developers during this conflict by S&P and, let's say, Bloomberg. You know why? Emaar has, interestingly, 3 examples. Today, Emaar has a backlog, a positive backlog of 163 billion dirhams, which means clients, organizations, funds have to still pay Emaar this value in the next, let's say, 2 to 3 years. Second, right? Emaar has something called as a 24x to income ratio, which means whatever Emaar gets and lends basically takes from international markets, they make 24 times than that. Third, EBITDA less than 1 to 1 ratio, which means if Emaar today decides to give all of its debt back, it will take them less than 1 year with what they're doing. This is just on Emaar. Now, interestingly, I want to move to numbers, right? Because look, I can talk about Emaar, I can take you to the Emaar office as well. I'm sure they know better than me. But as a consultant, right, today it is not just Emaar, it's Emaar Oasis. Let's look at some facts. Next. Density benchmark that I talked about, right? The Oasis, now comparable, obviously, when you're looking at Oasis, it's location based. I'm looking at comparables as well. I'm looking at actually, what is there in the offline market to bench it on. The Oasis, it's a villa and mansion only typology. It's 80 million square feet. The density is 30. When I say density, it is basically 1 million square feet. How many units are available, right? If it's villas, if it's apartments, if it's townhouses, how many units in total are available? If you look at acres, size, 20 million square feet, units, approximately 1200, density, 60. You look at Heights and Grand Polo, Emaar's two communities as well. Let's compete with Emaar. If you look at them, under construction, now these are villa, townhouses, semi-detached villas mix. They're not just villas and mansions. You look at the size, 80 and 60. You look at the units, you look at the density, almost 100, 110. Tilal Al Ghaf, 40% is ready in the community. Beautiful community, right? Villa, townhouse, semi-detached villa, mixed. Size, 32. Units, 6,500. Sorry.
Just letting you know,
Yeah.
this round is about legacy, global narrative.
Yeah, basically. Yeah, so I'm just, after that's basically 6,500, 200 units. Jumeirah Golf Estates, again, the same story. If you basically go to the next slide, okay, why again I'm giving all of this is, it is basically a global narrative, but I also wanted to, obviously help you guys understand where something as an Oasis, because today I'm going to talk about actually two Emaar communities which give the narrative of how Emaar as a brand has performed, which is a very interesting slide. Just quickly wrapping this up, if you look at the density benchmark, today if you look at established communities which are already ready, sit in the market for 10 to 20 years, this is where Oasis ranks. The only two communities above it with the density is Emirates Hill, Jumeirah Islands, which is trading at 4,000 to 5,000 dirham per square feet. Even Jumeirah Golf Estates, Barari, District 1, Dubai Hills Estate, which are big size communities, have bigger density pockets. Next. Verdict, the same size band. Now again, when it comes to Emaar, if you look at it, you have Oasis, Heights and Grand Polo, all three by, let's say, for example, Emaar. When you're looking at a size band of 50 to 100 million square feet, these are still better than a Jumeirah Golf Estates 2 when it comes to density. Just a quick thing, a lot of you may say, no, but Jumeirah Golf Estates 2 on the master plan looks like they have a lot less villas, which is true. But density, a lot of times, is not just about villa to land ratio. It's about unit typology mix. How many units are going to be shared in 1 million square feet? And this is again where Emaar changes the game. Next, peer pricing, resale market, right? Look at, again, for example, the Oasis. Look at this benchmark as well. Again, if you look at the density versus, let's say, the resale, the Oasis, okay, if you look at, let's say, Damak Lagoons, it is 30%, let's say, more expensive. If you look at the acres, it's 7.5% more expensive. If you look at Tilal Al Ghaf, if you look at Expo Valley, which are more to established communities, it is 21 and 50% less cheaper. This is something why Emaar does. Why, I'll tell you, Emaar is not just a semi-governmental developer. Emaar has bought Oasis 7 years before. Emaar particularly works with the government. By the way, with Emaar, and this is again from Emaar officials, they do not just auction in land. They are prioritized land by the government. This is one legacy of Emaar as well. It's not like a normal developer where they go and actually auction into a land. They are prioritized land. Today, that is exactly why when you're looking at basically the resale prices in 2026, Emaar still with healthy competitors sits at a better positioning. The only thing which is Damak Lagoons is 11.5 times more dense. I'm not even going to consider that as genuine competition when you're looking at Oasis and Damak Lagoons. Just one last slide and I'm going to move to basically the two Emaar communities just to basically make my point. Again, if you look at established peers today, look at where Oasis is sitting. If you look at even something to buy from the developer at 2,150 dirham per square feet, this is where your resale pricing sits. It is almost 139% less cheaper than Jumeirah Islands. Emirates Hills is almost 82% more expensive. Barari is 51% more expensive. Dubai Hills Estate, which is a mixed-use community, is still 40% more expensive. District 1, Jumeirah Golf Estates are both 30% more expensive. Today, this is the positioning of Oasis. Why? Again, I tell you, because Emaar strategically plans for 10 years. Emaar does not enter a market when everything is ready. It already enters plot size markets when there's bigger growth to be acquired. Now, Interestingly, two Emaar communities. Let's talk about legacy, right? Let's talk about two Emaar communities and how have they genuinely performed. Now, the biggest thing that every agent tells you in the market is look at the post-2020 growth story, right? Everybody hears this. From 2020 to 2025, everybody made money. Every villa community made money. Everyone made money. Now I'm going to change the game. Take the next slide. Okay. This is Emirates Hills. This is Dubai Hills Estate. Villa only resale price per square feet from 2016 to 2026. This was Dubai residential real estate resale pricing from 2016 to 2026. These are actual numbers found via DLD and Property Monitor for villa only resale transactions. I have eliminated any developer, let's say over here. Interestingly, now if you look at the next slide, and this is where it's interesting, the correction for two Emaar communities and why basically they matter. Emirates Hills, launched early 2000, has already gone through waved. In the correction period, did it correct? No. It went up in 5 years by 10%. Actual villa transaction data. Dubai Hills Estate, if you look at villa resale transactions only, it went up by 18% in the last, let's say, 5 to 6 years when the market was correcting. This exactly means that Emaar communities, if you're looking at a completely established community, or if you're looking at Dubai Hills Estate, which was actually, let's say, for example, at its peak start, both of these have not at all corrected. And this is genuine data. You can go and you can see when the market was correcting, both of these did not correct. Next. Now, let's say, for example, again, next, sorry. The recovery, did they beat the market? Dubai Hills Estate, okay, if you look at 2020, 2026, total growth, average price per square feet, 33%. Emirates Hills, 1,600 to almost now 4,000, average price per square feet, 22.9. The Dubai total residential market, average price per square feet, 23.2. Emirates Hills was literally in line with Dubai residential real estate prices. Why? Again, I'll give you a classic example. Emirates Hills was started in early 2000s when it was basically at 20, let's say, for example, 2016, it was already at its peak. And when you have peak communities, the beauty of this, let's say, is they're not going to fall, they're not going to sharply rise as well. Dubai Hills Estate, by the way, in 2016 was at its off-plan stage launch. So today, this is an Emaar community in correction time when villas were launched and how it performed in, let's say, a 10-year spectrum. Next. Okay, this I've covered. Next. Now, the actual legacy is done. Okay, the last basically 30 seconds. The actual legacy of Emaar will always be proved when you look at an existing community. He's going to obviously talk about Palm. I'm going to talk about Emirates Hills. Started in basically early 2000s. If today somebody bought a plot which was almost around 200 dirham per square feet, construction at that time was basically around 400 to 500 dirham per square feet. Today at 700 dirham per square feet with 3 market corrections, still it has made on an average anywhere between 20 to 22% year-on-year growth. This is all resale data. This is all resale transaction. That's my time.
This video is from Mohammed and the Emaar sales team. That I can challenge you that nobody in Emaar would have as much knowledge as Mr. Yashkunte. If you watch this debate of Palm Jebel Ali versus the Oasis, where we have one contender, Khalid Al Ali, has over 6.5 million followers. And then we have Yash Kumtekar, who's a brilliant consultant. If you watch this video, I challenge you, there is no Emaar sales / consultant who can challenge this tactic.
Nice or no?
Yes.
All right, guys. First of all, I want to thank Mr. Yash for explaining my point beautifully. You see now, if you want to understand the strengths of Oasis, how many communities you need to make it. You see? Okay, let me give you one phrase. You have 145 million square feet, 2012 blocks, and that's it. Nothing is coming like it, unreplicable, unrepeatable. It's not gonna come again. Now, Emaar, when they built Emirates Hills, it was benchmark. That cannot be repeated. Now it's repeated. When you look at Dubai Hills, when Dubai Hills was built, and like you can agree with that, nothing would like Dubai Hills coming. That's what they said. Now you have all this empty plot, after Dubai Hills, which is owned by Emirates. Maybe they're gonna come up with the Dubai Hills again, you know. But look at the coastline. I can tell you today, okay, in the next 20 years, minimum, once these plots are sold, nothing is coming like it. And that is the point which I'm talking about, the scarcity. Now, when you talk about the density, now let me ask a question. See, Emaar, and I've said this in the beginning, they build the best communities in the world. Nakheel built world icons. When Nakheel is thinking as a government. So Nakheel is thinking, how can I set a new benchmark in Dubai real estate? They are thinking, how can I take the residential market in Dubai to the 9 figures point? That's how Sheikh Mohammed bin Rashid thinks. Emaar deals with the government. Nakheel is the government. All right. So that is why when they are making communities, now see, in year 2000, okay, they built a very old, now considered an old infrastructure. Let me tell you the issues in the Palm. All right. Number one, you have many plots that have been sold. Same thing that Emaar did in downtown Business Bay, and they did not repeat this point again. Actually, I cannot claim that, now they already have a very big agreement with Al since there is a camera. I'm not going to say it, but they're coming up with a collaboration in Palm Jebel Ali. So, in Nakheel, they built a very old infrastructure they're having sewerage issues. The water flow in Palm Jumeirah, it takes 43 days to refresh. You can see, close to the fronts, the water is green. During midsummer, this increased the temperature by 7 degrees. This is the Palm. Our facts. Okay. What is the benchmark of Dubai real estate market today? The Palm. The Palm is the one responsible of taking the luxury market of Dubai to that level. Take the Palm out, luxury market, Dubai is going to go really down. So this is why Emaar, they built great communities. Nakheel built Ivan. This is the thing that you need to understand. Now, secondly, when you talk about the density, I agree about one thing. The way Emaar built the Oasis is amazing. When you take that much big plot. Okay? But I have one question, which I would leave it for Mr. Yashu, because he is way knowledgeable than me today. I realize in the Oasis. Can you guarantee, in the Oasis, yes, it's dropped from 100 million to 80 million swift. Can you guarantee me today that there are no apartments coming in the Oasis? Because the 2 points which Oasis is dominating, it is a density, okay? And it's villa only. Villa only is very difficult. It costs a lot, all right? And that is why. And then, in the beginning, I also said something very important. Why? We can say whatever. I can say Jumeirah Golf State is the best community. I can say Dubai Hills is the best community. But you always come and look at the numbers, all right? In H1 2026, all right? Right now, this first 6 months, look at the super prime market, all right? By the way, in H1 2026, Dubai made 296 transactions of $10 million plus. Who's the one leading? Dubai Hills Estate. 51 transactions. All right? Number 2, Palm. For the first time, someone outperformed the Palm. 50 transactions. All right? And by the way, this data is online in Nightrank. If you want, I can show it. No, it's fine. Okay, guess who's number 3? All right. So, Palm Jebel Ali, in its initial stage, is outperforming almost every luxury community in Dubai. No community in the history of Dubai absorbed much wealth in its initial stage than Palm Jebel Ali. Let me rephrase this sentence because I said it wrong. The sand of Palm Jebel Ali is outperforming every luxury community in Dubai and is competing toe to toe okay, with mature communities that have been in the market for 10 years. And that's what I said, what Nakheel is building from the beginning. Now, I have one question for you. When Dubai hit the 9-figure mark, okay, what do you think the candidate of these properties will do? The extremely scarce, unreplicable units in the villas, 146 million square feet, 2012, cannot be extended, cannot be replicated. And if it's replicated, they're gonna buy it with way more price. And if you talk about the appreciation, what is the most community that appreciated in Dubai? Oh, Jumeirah. It appreciated over 3,000%. No community did that. And every year, you know, because this is what I talked about before, the price cap. Because, see, there is a report by Knight Frank, okay? Let me just open the report because it's a very interesting report. I actually came through yesterday. It is mentioning, you know, this is something which is it's better that we. Is it the interactives? Okay.
एक connected वो speak to maximize इस पूरी site.
Yeah, sure. Okay. Now, see, what the Knight Frank research found, beachfront homes have the biggest uplift overall and have extended their lease since last year, with this home enjoying 76% premium over inland plots. 76%. So, again, just remove the coastal line. There is no product that can compete with service. But saying that the Oasis cannot be replicated, I'm very sorry. Emaar is a genius developer. And by the way, there is something also very interesting. See, Emaar, being Emaar, an extremely smart developer, they wanted to compete in the super prime product. So the only product in the Oasis that can qualify for the super prime market is La Vita. Just beautiful. 28,000 square feet built up area. You know? So Emaar launched the La Vita to see how this product is going to be absorbed. Now, La Vita was launched in September, October 2024. You know, and they launched 45 units. Super prime. You know how long it took for it to be absorbed? The last unit registered in DLD was in July 2026. It took almost 2 years to absorb 45 super prime products. But when Oasis mature, of course, you know, they're gonna be playing with that game. But the shocking part for me is that if Palm Jebel Ali Sand this year absorbed 40 super prime units. When I'm talking about resale value, because you know, obviously you have a very close front that's been handed over. So if we are talking about the sand, just imagine one single front is handed over. That is why, you know, the market is choosing Palm Jebel Ali for that reason. It's a trophy asset that cannot be replicated. If they feel that the Oasis cannot be replicated, trust me, they would have absorbed, and Emaar would have launched way more super prime products. That is why Emaar is a developer for you to study. I'll be honest in saying this, one of the main reasons that helped me understand this market is studying Emaar. I just see whatever they do and I study. This is the best strategy if you want to understand this market as an investor. So if it took them almost 2 years from a booming market by that time, 2024, 2025, all right, to absorb 45 units, do you think in the same plot they're gonna release mansions, all right, on currently we are in a correction phase? I don't think so. I don't think so. But it's also for Yash, you know, he studied voices way deeper than me. For him to confirm is this 2 minute cycle.
30 seconds.
30 seconds. Okay, so that's it. I don't have anything more to say. So, just for what in this, I'm gonna close this one statement for the listening investor right now. Oasis is a fantastic product, which I genuinely love. Okay, but just looking at the numbers and looking at the wealth absorption and everything, claiming that an inland ultra luxury blocks, okay, built by an amazing developer, is better than an iconic coastal line with private beach access. All right, this I cannot call this an investment strategy. I'll call it wishful thinking, because the numbers are proving otherwise. All right, thank you.
Now he will start, no?
I'm gonna say, so this is for Emaar. This video is for Nakheel.
Zara said they should give me a villa. You have to say this again. Yeah. Sorry.
If Nakheel wants to train their staff on Palm Jebel Ali, I think Khalid has made a video which should be textbook for Palm Jebel Ali. No one has done more research than Khalid. I don't think it's possible to do more research on Palm Jebel Ali. There's a particular video that Khalid has shot on Palm Jebel Ali. Everyone should watch it just to understand, and I think that is absolutely textbook there.
The last briefing we had with Nakheel, this is what they said. We are explaining all the communities that come to Palm Jebel Ali where something let me video. Yeah.
So Nakheel's staff confirmed this. You know, anyone wants to study Palm Jebel Ali, they send Khalid's video to them. That's how powerful, man. That's how powerful.
Nice, man. Amazing, man.
Thank you, guys.
Amazing, bro.
Okay, so next round is numbers and downside. So what is the opening price? So OP behavior, pricing, price per square foot, the risk if the market softens, and how both assets will behave in best, base, and worst cases.
I'm sorry, can you repeat again? Okay.
So we are going to assess numbers and downsides. So OP behavior, what was your opening price? What is the price per square foot? The risk if the market softens. How both assets behave in best case scenario, in base case scenario, and in worst case scenario. So are we ready for next round?
Will you start? Okay. So in my opening part, I said the downside of Palm Jebel Ali is that it requires a higher feature count. The price per square foot currently to access Palm Jebel Ali, you're talking about minimum 2,900 to 3,000 grams price per square foot. Okay.
The original big entry.
No. Now I'm talking about right now. Now we're talking about the downside, okay? Because now, when you're talking about Nakheel, when they started at 2,500. You know, when they started, that was so. I'll make it very simple for you. The entry point was 18 million. Now they announced that in their next launch, the entry point is 30 million. All right. Actually, it's 16 fronts. In each front, you have 30 coral villas because if you go now to try to get the closest comparison to the beachfront villas, because in Palm Jebel Ali you have two options. You have beachfront, you have beach collection, you have coral collection. Okay. Under the beach collection, you have around 16 to 17 villa types. All right. Under the coral collection, you have around 12 to 13 types of food. And why this? This is to create micro scarcity. So imagine, and these 2012, we did not add the plots. It's 2012 plots in all the fronts. There are also some information, but just being very careful. So this is YouTube. I'm not gonna say anything that Nakheel did not announce, right? It doesn't show. Personally, all right. So, what I was seeing.
2012
So in the micro scarcity. So if you look at the closest comparison is the garden homes. All right, currently. So in the garden homes, you have the plot area. Normally is between 5,000 to 6,000 square foot. Okay, built up area is around 5,500 square foot. Right, the old garden homes, built in 2004, maybe 2003, not renovated, you can get it on an average of 35 million. All right. And then if it's renovated, it goes starting from 45 million. The highest price I've seen was around 62 million for the gardening. Right. When you talk about the beach collection, the plot size is between 7,500 to 8,500 square foot average, okay, because it's 16 different ones, you know. It's going to take a lot of time to say it. But the average is around 8,300 square foot, started with 18 million, okay. And now what they're announcing is the new launch, they're going to jump it up to 30 million because this is the last front. After that, bye-bye. Next 20 years, nothing is covered. So now they're pushing it to 30 million because the market is absorbing it. There's no matter, and this is a very important point that I'm coming to the risk, okay? When you have the richest people, when you are talking about sovereign funds, private equity funds, okay? When you are talking about family offices, pension funds, these people, I saw a report on September 2025, they invested over $80 billion in Palm Jebel Ali. All right. So here we are talking about institutional investors. We're not talking about these people that can't go wrong because they do years of due diligence. They have access to way sophisticated. You know, we have a property monitor, DXP Interact. These people, they have access to Alibaba, which yeah, just to get the license for 1 year, you're gonna pay $5 million. So imagine, So Alibaba is choosing for them Palm Jebel Ali. That's why they're investing there. All right. So even during the war, Dubai, and this is something we should really be proud of, they made 14% increase year on year compared to 2025 this year. And when it comes to the value, we got 16% increase in the super prime market year on year because these people, they don't follow the headlines. They follow Alibaba. So the downside, these are the numbers. When it comes to the coral villas, now in the coral villas, the closest comparison you can talk about is the signature villas from, which is the trophy asset right now. The highest transacted property in the history of Dubai. It was a 600 million mansion, which is actually a signature villa in Palm Jumeirah. And right now, Nakheel wants to push this to 1 billion. And this is why they introduced Palm Jebel Ali. So the signature villas, it's the plot size is around 30,000 square foot, and the built-up area as an average is around 7,000 square foot. All non-renovated ones on the normal price, they start with 70 to 80 million, all right? And the ones with the huge plot, the luxury ones, which you're talking about 18, 19,000 square foot, of course, like the only way you can get something like a La Vida if you go to the tip plots. Oasis win always when it comes to the sizes. All right. So when you're talking about this one here in the coral villas, it started with 27 new. The plot area is 30,000 square foot. All right. Build up area is 12,000 square foot.
If I used to say that, okay, so this round we need to understand risk if the market softens.
Yeah,
and the asset behavior of risk disregard.
Yeah. So now I'm talking about the asset behavior on your also, so that you can understand how this thing is behaving. All right. So there, what I was saying, it's starting at 70 million. The one with the bigger plots, 20,000 square foot, it starts at 140, 150 million. Nakheel, when they launched it on 16 different designs, and I've shown this in my video. You won't believe that these two are in the same island unless they tell you it's in Palm Jebel. It's completely different philosophy. In one you have 2 study rooms, in one you have a gym, in one you have, sauna and different things. So it's completely different so that you can choose your own lifestyle and what matches with you. All right. Plus, create a micro scarcity. You don't want to compete with 2,000 films, although it's 145 million square foot. So in Palm Jebel Ali, they started, the plot area was 30,000 square foot, built up area was 12,000 square foot. They started with 27 million. Now they are pushing it to 40 million. That's the last round we launched. And the one with the bigger plots, okay, of 19, 20,000 square foot, this one they pushed to 45, 55 million. Now just see the gap between something. I told you earlier that the water refresh in Palm Jumeirah in 45 days. Here it takes 3 days, despite it being 2.5 times the size of Palm Jumeirah. Nakheel is working very hard to target blue flag certificate. Already the Jebel Ali beach got the blue flag certificate, but unfortunately, for Palm Jebel Ali to get the blue flag certificate, people need to be living there. But everything is there ready, which this is something also a bigger difference when it comes to Palm Jumeirah. Huh? Yeah, when it comes,
We can take one product and tell me what is the worst case scenario, base case scenario, best case scenario, and the risk if the market softens.
The risk now, when the market is softening, people are buying it aggressively. Okay. All right. So I can show you here some few transactions. I don't know if this helped now, because the same thing that Yar said. You know, all these people that are buying 40, 50 million on an 80-20 payment plan. You know, these are not people. You know, yeah. In the first 1 to 2 years, you may say people who default. You may say people because of war that they are looking to sell on OP or below OP. But right now, if you're talking, for example, on front end, which is handing over next year, like you can see the resale transactions. Like, you know, this is a Coral Villa, which was bought at 30 million. Now is selling at 37.2 million. Right?
So it's not correct. It's fine. It's fine. So 30 million selling at 37.
Yeah, so it's selling at 77 million. And then like this is another one at 90 million selling at 25 million. And this is like, these are some few examples. This is the dates. You got it's October 2023 to February 2026, November 2023 to April 2026. They are all selling now after the option. And this is why, you know, you got, see, I've never seen any project in the history of the UAE, forget about Dubai, that absorbed that much wealth in its initial state of China. No. You cannot have sand competing with Dubai Hills or competing with the park. It's crazy. But you know, this is what it tells you. The risk here is very minimal because the wealthy people are buying here. The wealthy people are what kept Palm Jumeirah, you know, in the upper phase. So, for me, I believe by handover, the minimum you can expect is 70 to 80% appreciation, especially on the Coral Villas.
Right. Coral Villas, if you're saying the 30 million ones?
Yeah, it's already 27.
27 million one. And so it's saying very close to 80% appreciation.
Yeah, close to 80% appreciation compared to its closest comparison. And you know the wealth absorption which is happening now. All right, and this is the worst case scenario. When you're talking about the best case scenario, I believe that these are the first candidates which can qualify for a 9-figure number.
So you're saying that a 27 million Coral Villa can go up to 49 million dirhams.
Now it already, and Nakheel is launching it now at 60 million.
So 27 million villa, what is
The only challenge now is that till now people they can get villas directly from Nakheel. After the next launch is what?
So this 27 million villa, what is the bid up area at the top? Just to get okay.
Yeah, it's a Coral Villa. So you know the plot is 30,427 square foot. Okay. The built-up area is around 12,800 square feet.
And so you're saying that okay, in a soft market, they sold 30 million products for around 27 million, which is fantastic. This is happening April 26. And your first case scenario, you say 80% appreciation. This can go towards the 50 million mark.
The most important, yes, exactly. But the most important part that you, Mr. Investor, keep in is that this is an asset that cannot be replicated. The reason why the wealthy are going there, okay, is that there is an iconic new standard in engineering which took Nakheel 26 years to build, okay, and you are buying there, and this is something that cannot be replicated. And scarcity is the number one measure for value, okay. And if you know, we can talk from here until next year. I'm going to use this one. We can talk from here until next year. But just follow the wealth. Invest where the wealthy people are investing.
Okay, so thank you, Khalid. That was inspirational. I loved how you story told Palm. Let's get to facts. So the Oasis by Emaar resale facts. I have studied not 1, 2, 3, 4, all 77 transactions happening in Oasis. July 2025, July 2026, Feb price correction, conflict, and peaks as well in July 2025, right? And the actual truth is not everything is great, but this is exactly where me as a consultant will guide my investor into how to select an asset in the whole of the Oasis. Next. 77 resale transactions have happened all across Oasis, okay? The total resale volume was 1.1 billion, for example, dollars. Now, let's talk about base price to what is right now selling, right? Oasis launched Palmyra July 2023. The base price that Palmyra was selling was anywhere between 1500, 1600 dirham per square feet. Today, if you look at Mirage, even if you look at Palmyra Collective, their recent launches, Jan, let's say 2026, average PSF was 2150 on an average, somewhat 21, somewhat 2200. The average growth every year that Emaar has maintained is 9.3% per year. Next. Just a quick introduction on the supply by typology. Again, Emaar, they have 4-bedroom villas plus a basement, which itself, now just to highlight this, in the whole of Dubai, a 5-bedroom villa with a basement, right? It's a very unique concept. The comparatives that you have is you have address in Dubai Hills Estate, you have certain villas in Jumeirah Golf Estate, you have Tilal Al Gaf, you have Damak Hills as well. 4-bedroom villa with a basement, zero competition. This is the first of its kind. This is basically talking about the whole supply, just for our viewers to understand. I think we'll showcase it in a picture. The next slide, let's start with Palmyra. The initial phase, how has it performed in the last 1 year? 40 transactions. The average 4-bedroom growth which has happened, distress, flat, profits, is 8.97% per year. This is per year. This is not total. This is per year. Now, interestingly, what are the findings? I have all of this in Excel. If somebody wants to see, I have all the transactions mentioned in Excel. Your lagoon versus periphery growth. The 4 bedrooms, the one on the bigger lagoons, were growing at 13% on an average year on year. The ones basically on the periphery grew by 4.7% year on year, right? Total, again, volume itself from Palmyra was almost 474 million. Now, interestingly, findings, right? The frontage beats bedrooms. A lot of times we think that, I should go for a 5-bedder, a 6-bedder, a 7-bedder. Well, in Palmyra, this was not the case. The lagoon facing 4 bedrooms on an average, right, grew roughly 3x faster than periphery plots for, let's say, 5-bedders. Corner lagoons basically is the peak. If you're entering into a product where you have a corner lagoon, where you have extremely scarce units, these on an average grew as 4 bedrooms 18.3% year on year, 5 bedrooms 14.8% year on year, with corner plots having, let's say, a bridge access on the bigger lagoon. Now, interestingly, what happens is, let's say, look at exit time in, okay? The share of stock resold, okay, on an average is identical if you look at it in terms of supply. 15.3% for 4 bedrooms, 14.3% for 5 bedrooms. There are 2 negative sides as well. Let's talk about these, right? Both the contemporary Smile on a smaller waterway, which had a sufficiently smaller plot, they unfortunately lost. Now, there's another thing which I always like to say, right? Distress deal. Let's talk about distress deals as a whole, and then I'm going to talk about community. In 77 transactions, there are 6 distress deals, right? Now I'll talk about genuine supply to number ratio. Let's consider I'm talking about July 2025 to July 2026. By the way, Mariva 1, 2, Lavita, till date, there is no transaction on the internet which has been traded. Interestingly, I have a Lavita mansion also at OP if somebody wants, right? 1 basically deal, right? Let me put it out there. None of them have been traded. If I just take supply launched by Emaar before July 2025, it was 1,730 units, roughly, because I'm not counting Mariva 1, Mariva 2, and Palmyra Collective. In 1,731, 6 were in distress. That is less than 0.5% of the market that came into picture. Now I'm going to give you another thing, right? Because these are transactions, right? You might say, but there are distress deals in Oasis right now. Let's count. I saw 6. There might be even 6 more. Let's say 12. I'll add this to the, let's say 6. Let's say 18. I'll add 2 more. 20. 1% of distressed deal supply that came into the market for Oasis, right? And 1% cannot justify how a community performs in such an early phase. Next. Mirage, interestingly, traded hard, but price flat. 22 transactions happened in Mirage. Now, interestingly, what are the findings? On an average, it did not really grow. It grew on an average by 1%, right? There were a few, obviously, which traded a lot more. There were 3 basically transactions which were in distress. All of them were on the pocket park. Now, interestingly, the second most traded cluster, right? Now, over here, interestingly, if you look at it, all of these things, one thing for Mirage and Palmyra, which was clear, because for my investor, right, he's not just throwing money into Oasis. He needs to exactly understand how a community pre-stage has performed and which kind of asset can I really pick and choose. This is very important. If you look at Palmyra Lagoon, on an average, it appreciated by 13%. If you look at the green belt as well in Mirage, interestingly, opposite the lagoon, it appreciated by 4.7. If you look at the periphery, it appreciated by 4.7. If you look at the smaller and bigger lagoons as well in Mirage, hardly 2.2 to 1.7. But if you look at a pocket park, which was enclosed, it did not have open space in Mirage, it depreciated by 6.4%. This is truth, right? The learnings over here, which we saw is, yes, a lagoon wings. Yes, for example, where the plot size that you're taking wins. I have a cluster map itself, which, I'll attach, let's say, to the PDF, where I can pinpoint and show how a Palmyra, how even the best traded in Mirage, which was near the lagoon on a green belt traded. Why? Open space, primary, let's say, access, and Oasis is about lagoons. Lagoons in the resale market have genuinely won, have genuinely, let's say, outperformed. Next. Rest of the master plan, let's look at what have been the transactions. Palmyra 2. Now, if you observe Palmyra 2 is an extension to, let's say, Palmyra 1. Palmyra 2 only has 4-bedroom independent villas. Now, Palmyra 2 is circulated across, let's say, a lagoon, a very smaller lagoon, right? Palmyra 2, there were only basically 4 units in resale. Hardly the count itself is 56 to be, let's say, supplied by Emaar. On an average, the growth percentage every year was 9.45. Out of the 4 units, 3 were on the lagoon, right? Let's look at Address Villa Tierra and Palace Villa Ostra. Now, definitely, if you look at the total supply with respect to resale units that actually transacted, the numbers are very less. Why? Because Address and Palace were, let's say, launched in March and April 2025. Payments are still yet to be made. Not a lot of people want to sell. Today, I have 4, let's say, distressed deals from Address Villa Tierra, which were distressed in the last 1 month. We made a video. Now the seller again wants OP. They don't want to basically budge. Interestingly, for Mareva 1, Mareva 2, Palmyra Collective, there is 0. Even for Levita, there is 0 recorded transactions till date, right? Now, again, there might be a combination of 10, 15 listings as well. None of them have been transacted till date right now. It's very, very early. They were launched in December and Jan. Interestingly, Emaar, for a lot of the clients, they actually even gave extensions in payments. So if you're paying, let's say, 10% after 1 month, these extensions were made for the next 3-4 months. That itself helped these buyers not willing to sell. My basically simple theory now for my buyer, I'm going to talk about the worst case scenario. I'm going to talk about the base case scenario. I'm going to talk about the best case scenario. And I'm actually going to use examples over here. Today, my average resale transaction value, if I have to enter Oasis, is anywhere between 1850 dirham per square feet. Typically, if you're looking at earlier clusters like Palmyra and Mirage. Palmyra is basically handing over Q4 2027. If I have to, let's say, take 1 unit, right, as an example, I would definitely buy a 4-bedroom on the lagoon, let's say, in Palmyra right now, because it has one of the genuinely best, let's say, records if you look at all of these things. The second, if I look at my, let's say, base case scenario, today, conservatively itself, okay, I can look at an increase in sales around 15 to 18%, let's say, by next year end, by the time it gets handover. If I look at a 6-year, let's say, growth period, today I am buying this at almost less than 2,000 dirham per square feet. My exact comparables, all at ultra luxury communities inland, are trading at 4,000, 5,000. If I look at a 6-year window, even in conservative measures, I can literally make 60 to 70%. And I'm happy with that as well. He claims 70 to 80%. We don't know. This is proven data. people have made year on year 14% when it's still yet to be, let's say, completed. I can easily make 60 to 70% in a span of 4 to 5 years when this is getting handed over. This is, let's say, my best case scenario. This is my realistic scenario. My best case scenario, everybody says Emaar and Jebel Ali, in 5 years, everything will double. I don't believe that at all, right? I stick with my realistic, I rest my case over there. In rentals, let's talk about rentals as well. Ultra luxury community rental price per square feet today in 2026, rental transactions that have happened in May, June and July on an average is anywhere between 170 to 190 dirham per square feet. Now, will a Palmyra obviously reach that next year? Absolutely not. I am considering a conservative measure of 95 to 100 dirham per square feet. Even then, I am achieving a rental of anywhere between 5 to 5.5%. The beauty, as even Khalid mentioned, these are products which are wealth generation products. These are legacy products, right? The market is not such a stage where it's going to reward you phenomenal rents of 9-10%. We will start at 5 to 5.5. It will go up to approx of, let's say, 9 to 10% net in a span of 6 years, matching basically something like a Jumeirah Golf Estates or even a Dubai Hills. If it has to go to Emirates Hills, it will take another 7 to 8 years. That's my exact journey. Now, talking about products basically in terms of softer markets, right? How can my product react? And this is actually proof. In softer markets, by the way, if you are taking still, so interestingly, all the lagoon plots in basically the last 77 transactions, right? They have made money for their clients. There is not a single, let's say, negative deal. Interestingly, all the green belts, right? A lot of them are right now selling at OP, close to the lagoon, close to the pocket park. All the ones in Mirage on the pocket park, unfortunately, had to be transacted at a later price. Now for me, okay, just last 30 seconds. For me, why this is important is obviously Mr. Khalid, he beautifully explained Palm and all of these things. This is actual resale proof of transactions, what has happened in Oasis. And I, as a consultant, can understand where to place 20 million of my client, which cluster, which typology, because I have the results with me.
This is the last round. Okay, it's a crossfire. Each consultant challenges the other's assumptions and exposes weaknesses in the opposite projects. Okay? Total 10 minutes. Okay,
Yeah.
so shall I give like just 5 minutes each or 10 minutes? Yeah? Just 5 minutes each, okay?
No, Khalid can ask. I presented right now.
Connecting the numbers, okay? I got that's where I've mentioned. If you realize the highest appreciation was in Palmyra. In my humble opinion, Mirage and La Vida are the two, like if you are making this debate, products that can, go on a level to compete with Palmyra. Like Palmyra 8 to 9 million, if you are talking about, like my townhouse is 14 million. It's totally different product points for it to compete. So I was looking to David, of course. I want to take his money.
Yeah.
So yeah. So like now the main reason, like if you talk about OP, it's not a sign for you to measure the community. Like let me give you an example. That's why I never discussed that. A businessman wanting to take funds for his business. He won't care about the investment you are buying. I need funds for my business. That's why, for example, you can see even in Palmyra, I saw transactions at 2.5 million. 2.5 million. This is my 1 bedroom, Luna. Yeah, because a guy needs to take funds. But like, it's not, Palmyra is an amazing product. It's just someone used the situation to his advantage. And that guy who bought from him, he sold at 500% appreciation. But this is not the point here. Here, if we want to talk about Palm Jebel Ali versus the Oasis, in my humble opinion, Mirage and La Vita, they are going to explode once the price ticket cannot get them to Palm Jebel. Because now the people who have the money for La Vita and for Mirage, they have option, at least you can get some resale OP maybe for Mirage that you can get you there. This is the main reason here. The only, like, if I talk about it from capital point of view, for Palmyra, it may go on the 3-bedroom apartment. The 3-bedroom apartment there is selling around 7.5 to 8.5 million. You got my point. So here, Yash said something extremely beautiful, okay, which is a 4-bedroom with a basement, okay. It does not exist in the market, and this is why it's getting 14% year on year. The question is until when?
Okay.
So if okay, is it question answer?
No, it's fine. It's fine.
Yeah. It's until when, like, see, when Emaar announced this thing, South Bay, like for example, we start on the 6-bedroom, they made 6-bedroom mansions with a lift on the same size or closer size to Jumeirah. And this is the point which I am mentioning here. Lagoon, it's amazing. Well, we have like districts, the district 1 succeeded with the Lagoon, okay? When you are talking about the Pulse Beach Villas, they succeeded with the Lagoon, okay? But can you compare this with an coastline oceanfront hotel?
Is that a question? Will I can talk?
Yeah. No, this is the question. So I asked Mr. Yash 2 questions, okay? I have to ask 2. Yeah, these are
Yeah, 2 basically.
I got 5 in how many minutes?
Yeah.
Yeah.
It's 3.5, but
Okay, just basically, yeah.
My 2 questions. Number 1, can you guarantee me that there are no apartments coming in the Oasis
Okay.
when we are talking about this? Number 2, the 14% year on year, but if we have a 4-bedroom with a basement on a lagoon, and this does not exist in the market,
Yeah.
can you guarantee that this situation will be there for?
Okay, perfect. So, number 1, right? If a Palmyra right now anybody has for 2.5 million, let me know, I'm buying it. Okay. Second thing is Palmyra is not at all a 4-bedroom with a basement. I was talking about Palmyra, which is just a 4-bedroom. A 4-bedroom with a basement started with address. Okay. That is still yet to be obviously understood. Now, your 2 questions, right? Can you guarantee whether apartments will come next to Oasis, and can you guarantee, obviously, you know, with the 4-bedroom with basement, will this not basically happen in the future? Absolutely not. And why should I? Number 1, okay, my end user, right, is basically putting his hard-earned money and investment into a product which has a genuine, let's say, trajectory right now, right? Even if apartments, let's say, for example, come, which, by the way, according to Emaar, they are never going to come because that is not at all in their, let's say, mindset. But let's say, conservatively, right, something over there comes. When is it going to come? Number 1, we don't know. Let's say it comes, let's say next year, right? So ideally in 2031, my Oasis gets handed over with his apartments as well. My apartments are looking into Oasis, right? In, let's say, Dubai Hills Estate itself, right? Dubai Hills Estate, you also have apartments today. Today, Dubai Hills Estate is still trading at positive gains. And apartments basically came in 2021, 2022 as well. If you look at the graph of Dubai Hills Estate, it's still trading at positive. So for me as an investor, I'm not really scared about an apartment coming into an Oasis, number 1. Number 2 itself, if you look at 4-bedroom villa without a basement, with a basement, can you guarantee this will never come, right? There is no guarantee, again. But this is something unique, because for something else to come, right, as a 4-bedroom villa with a basement, now, interestingly, this is not just a 4-bedroom villa with a basement. This is in one of the least dense community when we're talking about 80 million square feet, right? Even if I say that Emaar itself, because obviously one of the largest land banks, right, in, let's say, the market, competing with Dubai Holdings, if they have to do this, when are they going to do it? They did Emirates Hills 20 years ago, right? Let's say they do Oasis in 10 years, right? My client would have made sufficient money till then. Don't worry.
Do you have any questions?
Yeah, so my 2 questions, okay, for Mr. Khalid are, I want to read those out because I've researched a lot, right? But again, so on. Okay, so it's a part question. Mr. Khalid said something very interesting, right? Knight Frank report, 10 million USD H1 2026, right? How many transactions did he say? 40 transactions in Palm Jebel Ali, right? Shall I give you the number? This is DXB Interact and Property, let's say, Monitor. Palm Jebel Ali, okay, has had 38 transactions. Let's even put it, I missed 4 to 5, 45 transactions, right? 90% were 5 and 6 bidders. Price points, 20, 22, 23, 24 million, right? How much is 10 million US dollars? Almost around 40 million. But that's not even my question. He said something very interesting, and I agree as well. How can, you know, an Oasis beat a Palm Jebel Ali, right? Let's look at numbers. The best unit in Palm Jebel Ali, okay, was a 5-bedroom front end, 069. It has made basically 11.2% year-on-year growth. Amazing. Congratulations. Let's look at mine. 4-bedroom in Palmyra, 106. It has made year-on-year growth 18.32%. But I don't want to stick with that, right? Because again, this itself is, again, fine. Interestingly, now, if you look at this, almost, right, Palmyra, if you look at the average, let's say, resale transaction growth, Palm Jebel Ali had around 38 to 42. On an average, looking at 2023 to 2026, it grew in the market by almost 3.5%. Great. Oasis average growth, all, let's say, transactions with distress and everything clubbed together is 5.27, right? Today, now interestingly, let's look at even, I mean, Khalid might say, no, yours a 4-bedroom, right? Compare it with a 5-bedroom. His 5-bedroom, front end, 069, okay? My Palmyra 86, which is a 5-bedroom, still made 14.84% appreciation, more than his, right? Now, definitely, Palm Jebel Ali in 15 years might even quadruple, right? Do you want to wait 15 years or do you want to see actual returns? But now, my second question to you, okay? This is basically, no, my first question is, when you basically obviously claim that, you know, a Jebel Ali and all of these things, you know, are great, the facts say, right, that an Oasis, on average, a fact says that my best to best beats it. A fact says that, interestingly, 11 transactions out of 40 in, let's say, Palmyra still beat his average, still beat the best transaction that he's done, front end. This is my first question. How do you justify that, right? The second question, now actually let's look at a timeline, correct? You said that front, I think, N or O or whatever, basically that line itself is getting handed over, obviously, next year. Let's look at DLD construction status. The best, let's say, front, which is currently in progress, is 46% constructed, which is supposed to be handed over, you know, next year. This was basically obviously launched in 2023. Maybe a lot of your buyers bought it, right? Palmyra, which was my, let's say, launch, which launched 3 to, let's say, 4 months before, is at almost 72.56% construction. Now, the last question is, forget about Palmyra, right? Maybe you want something else. Correct. No. It's a sub question. Palmyra, Palmyra 1, Palmyra 2, Palmyra 3, and Mirage. Mirage, unfortunately, is still at 46%, let's say, construction, right? It came in June. It's still more than Frondo, which launched as the first cluster, which is handing over in 2027. So when Nakheel says that, don't worry, the same mistake for Palm Jumeirah is not going to happen, right? How can I see construction timelines? Can we genuinely see who is the buyer? Because it might be, let's say, for example, a glitch. Or let's say, okay, fine, there is one transaction.
We are talking numbers.
Okay,
right? So
let's say.
now this is the point that you said, show me, I'm buying it. If it's 10, I'm going to tell you, but this is not a justification for Palmyra. Again,
Yeah, 100%.
this is not a justification because, you know, now the reason why I asked you, you said Oasis is a villa on the road. That was the main clause.
Yeah.
And then you talk about the density. That was the main unique points about the Oasis. This is why I asked you here that about the apartments. I agree. Dubai Hills is leading now in the super prime market. Yeah, with 51 transactions. And we will see the report. You said 28 or 24 million. So something very interesting. Just let me, because you know this have to look a little bit. Now here, for example, this is why I said in Palmyra, like see this. This is almost 90% of Palmyra full unit. You know, 7 million. If you're taking 14%, talk to me about numbers. You're putting 20 million. Do you care about the actual money growth that you are making or about the percentage? Now, Palmyra, I said this before, Palmyra, the main reason why it's dominating, and Mirage is going to dominate and it's going to, and La Vita is going to dominate and it's going to. But because the person who is buying Palmyra simply cannot buy a villa in Palmyra. The ticket price is different. That is why it's booming. But when you're talking about Mirage, once Palm Jebel Ali appreciate and the Mirage guy cannot enter there, there's gonna be more demand about the Oasis because there is nothing when you're talking about the offline market that is competing with Palm Jebel Ali other than this. You get my point. So yes, like when you are talking about year-on-year growth, it is something. But when you are talking about value, and yeah, wait.
Sorry, Khalid, the 23% that you showed, right? What was the justification for that? I didn't understand.
It's from and handing over next year.
Yeah.
The guy wanted to sell it, you know, and he bought it at 37.2.
No. Like
The justification, okay. Now you are saying that the Palmyra is, making 14% year over year.
Yeah.
I asked you 2 questions. Number one, can you guarantee this is not going to come tomorrow? And you said, I cannot guarantee, meaning that there's going to be a price cap for that. It's going to mature faster than when you're talking about Palm Jebel Ali when you have units that cannot be replicated. And then the second point, when you're talking about, I asked you about the apartments because you said it's villa only. I don't want to repeat that part, okay? So here, now it's 23%. Obviously, it's way less than 14% year on year. But the entry ticket here is 30. So when you are talking 30 to 37, with that 23%, it is almost 90% from the full price of Palmyra. So why am I saying this? I'm saying that you need to compare an apple to an apple. You cannot compare Palmyra with anything in Palm Jebel Ali because the price, the entry points, the philosophy, everything is different. You have here Palmyra collected. Here you have, now with the current launch, we have 30 different villas designed by different renowned architectural firms.
Yeah.
So there is very hard to get the price cap.
Sure,
and
absolutely.
this is the exact thing which I said. Secondly, here, guys, are you guys aware about this? Like,
Yes.
almost, yeah. Okay. Okay. So let's go here to the newsroom. I hope they did not remove the report. Okay, record-breaking 296 on H1 2026, 165 in quarter 1, 131 in quarter 2, okay? Value of $10 million residential sales rose 14% over H1 2025, and 49% on 2024, and 16% on 2025. This is the highest year ever when you are talking about about the super prime market. Dubai again dominated its previous record. Now, when you come here, okay, so let's see. Dubai Hills Estate has cemented its position as the top performer of this segment for H1 2026, recording 51 homes sold over $10 million. Followed closely by Palm Jumeirah on 50, Palm Jebel Ali, which is due for completion. They're saying due, I don't know, in 2028 there is no due for completion, it's just one front. But I think Knight Frank, when they are saying this, they feel that once one front is handed over, the whole market is gone. Came third with 40 luxury homes in sales in H1 2020. So if you want to question that, you got to question Knight Frank.
Absolutely, and I'll question it immediately, right?
No.
This will basically account for maybe off-plan sales with the developer, maybe.
I'm talking about full off-plan.
Done. Perfect, absolutely, right.
Okay.
Let's
Now,
say
during this conflict, I have 40 people willing to put $10 million on a sand.
yeah.
And this never happened in the history of Dubai.
Okay, but this is H1 2026, and just one last point, right? You and I absolutely agree. He said, how can a 30 million basically dirham product compete, right? Let's compete with a 5-bedroom basically in Palmyra. Now, interestingly, in the whole of, for example, Oasis, right? There's only one thing, and which I beautifully love, right? A villa on the beach with water, right? How can you go wrong, right? Still, now comparing apple to apple, forget about the 30 million, right? My basically Palmyra 5-bedroom at 17 to 18 million, right, which was resold. His, let's say, 5-bedroom, which was resold around 20, 22 million. I think that's a fair comparison as well. Why did it beat it? The other thing which I asked, which maybe I don't know if he answered, but in terms of the construction timeline, right, when both of these were handed over.
It's OB is 12.9. My townhouse is 14.
Okay.
It's still not competitive. Even now, if you are going with 17 to 18, you cannot win them.
No, fantastic gap price.
Next one, I want to Naya.
No, but Khalid, bro, amazing.
Oh, what beautiful, man. What a debate.
Bro,
World class.
now you have to buy 2 units. One in Oasis, one is here. So the 3x capital will make more.
Oh, really?
Yeah. Based on all the numbers and the wealth absorption going on now, in my opinion, and I'll say it again, claiming an inland lagoon plot with a luxury community, even though it's developed by Emaar, is better than an iconic beachfront property with private beach access. I don't take this for myself as an investment strategy. I love Oasis. Don't doubt me on this. But I, as the rich people, they chase scarcity. So, if you are comparing absolute scarcity on something which I can tell you 20 years from now is not coming, comparing it with an inland plot, which is lagoon, this is not an investment strategy. I call this wishful thinking. You cannot compare both. Palm Jebel Ali is in a totally different.
Beautiful. Just a first disclaimer. when he asked about apartments, by the way, with Emaar, they will never include apartments with the same access as Oasis. They will divide the two plots and make separate. As per Emaar, they're not at all going to do apartments, but let's say in the future. Now my closing statement, right? Today when I say I live in Emirates Hills, you know my caliber. You know when I live in, let's say, Palm Jumeirah, I may live in an Oceania as well, right? A one bedroom. Address itself as a brand matters a lot. But let's look at this. I today talked a lot about numbers, and obviously, Mr. Khalid as well, I respect him a lot. He talked about the future. But as an investor, when you're investing 20 million, I can maybe make quadruple in the next 20 years with a Palm Jebel Ali, infinite land. But let me start making you money with proven results in the Oasis. Now you choose.
Okay. Toughest part now for you. Investor.
So see, this felt like a Lamine Yamal versus Messi. You know why? Because we've got that young skill, energy, aggression. You got that on one side. You got that calm knowledge, and the way in the end he came and tried to score the goal. You saw that the way he positioned himself. In the end, he uplifted energy. That's phenomenal. Okay. And now we have to challenge either one of you. See, can Palm Jebel Ali be replicated? Probably not. But then there are a lot of interesting beachfront communities coming. We've got ADQ, and then Nakheel Sabri is trying to make this Orab. I think they've got the Budayat Island coming. So beachfront villas and mansions itself. Maybe better versions can come out. Construction progress has not been fully updated yet. In terms of, I think, say just from the whole debate, we haven't gone into a specific product as such. But in general, I feel like with a 20 million budget, it would be more convenient for me to invest into an Oasis. But if I had a higher budget, if I had 30 million rooms, because from my understanding that Caudal Villa is the sweet spot. If I had 27 to 30 million rooms,
So higher game on a higher profit.
with a higher game on a higher profit. I think one of the very convincing point for me was that institutional funds, right? Institutional funds have invested almost $80 billion into Palm Jebel Ali. That's a very strong point. That because genuinely, and I know of this, that I know institutional funds will invest into Palm Jebel Ali, and that's the power of Palm Jebel Ali. And definitely, if there are two products that put Dubai on a map, one is Burj Khalifa and one is Palm Jebel Ali. So these two are two icons inside. I cannot give a verdict. I'll tell you why. I'm going to open voting lines for 1 week, okay? Because I'll tell you why. I love both of these guys, I love both of them too much because, like I said, I respect Khalid. He's very knowledgeable. The way his due diligence is of another level. Yash is like a prodigy, he's I think in terms of he's gone at another level, and I've seen that trajectory growth, so I think it's really unfair to put me on that spot for a judgment. As an investor, I think that one of the points that really struck a chord with Yash is that the 4-bed with a basement has performed better than a 5-bed. So mentally, I'm inclined towards that if I can get a 4-bed with a basement on Lahoons around that 20 million mark, it'll hit that spot for my object, If I had a higher budget, if I had 30 to 40 million dirhams, no doubt, it's a dream to live on the Palm Jebel Ali. But what I'm going to do is, for the next 1 week, so today is 27th July. Okay, whenever this video hits the market, okay? Whenever the video, I'll check with the marketing team. For 1 week, okay? We're going to put it out there for the public, including you guys, okay? Whoever wants to vote for Yash will say Yash, and wants to vote for Khalid, say Khalid, or even better. Whoever wants to vote for Yash, say Emaar, and whoever wants to vote for Khalid, say Palm, and then we'll take 1 week to see who is the actual winner and come up to the verdict. Is that fair? That is fair because most
Can I add one state?
I think
you'll add one state.
yes, you can add one state.
On the same topic.
Yeah, correct.
One of the ways I assess the market is that landmarks don't need any location to justify themselves.
Okay.
Suburban areas need landmarks to justify themselves. So, for example, you always say how close you are to Marina, to downtown, to the Palm. Yeah. So just go on all the videos of the Oasis, not all, mostly, including my video. Okay. When I want to justify the location of the Oasis, what usually people say, it sits beautifully in a convenient area between the two palms. So it literally borrowed the brand equity of the palm to justify. Have you ever seen someone selling Palm Jebel Ali about how far it is from the Oasis?
I'll give you one last statement as well. Yeah.
I love this guy. I love this guy.
Oh, nice music. Yeah. I know what to say also.
Okay. I completely agree on that, right? Palm Jumeirah, right? Am I close to Palm Jumeirah? Am I close to, let's say, for example, Palm Jebel Ali? Okay. But I want to ask you guys one thing, right? Today, these are hardcore facts. Investment. He's putting 20 million dirhams, right? He can have the best, let's say, for example, location, right? And still not make money. Today, if I, let's say, have to justify an Oasis, I have 60 minutes of me talking about pros and cons, right? I love the storytelling with Khalid. But is that going to justify 20 million that you put in just because, oh, I can say that Palm Jebel Ali is the next location? It is after 2040.
If night
In
H1 night
Good job, guys.
No, but Khalid.
Next we have Tanveer versus
Amazing. Man. You know,
I want Tanveer. I want Tanveer.